Greetings. I am speaking to you from New Jersey, and today I'm going to talk about 7 investments you can make to hedge against inflation. I made an earlier video talking about the inflation problem and the investments you can make to protect yourself from inflation. So if you want to watch that, that goes into depth about the situation right now with inflation and money printing and the explosion of the money supply. But if you just want to learn about the investments you can make to protect yourself from inflation and perhaps even profit from inflation, then watch this video, because I'm just going to talk about the hedges against inflation. So make sure you stick until the end, because I'm going to save the best for last. But for the beginning, it's not really in any particular order. But at the end of the video, I'll give you my rankings of which ones are the best and which ones are not as good in terms of what to invest in to protect yourself against inflation. Starting off, we have investing in real estate. So property prices and rents rise with inflation. When you invest in real estate, you are protecting yourself from inflation, because the money you put in can rise with inflation, because now it's in the form of real estate. Real estate does rise with inflation, and you can also get higher rents because of inflation. If you don't have enough money to buy entire real estate properties, you can always buy REITs, or real estate investment trusts, which are basically companies that operate revenue generating real estate. And the main drawback, I think, for investing in real estate are the taxes. You have property taxes, you have dividend taxes if you invested in REITs, and you have taxes for your rental income. So otherwise, I think it's okay, but you have to remember the tax rates, and depending on where you live, you need to make sure it's okay for investing and the tax rates won't hurt you too much. So the second thing to invest in to hedge against inflation are commodities. So commodities are basic goods that are interchangeable and not differentiable. Examples include grains, metals, oil, and natural gas. And commodity prices also rise with inflation. So when you put your money in commodities, you can protect yourself from inflation, because the value you put in will rise with inflation. And there are 2 particular commodities you should invest in to hedge against inflation. But like I said, these 2 are, I think, the best hedges against inflation, so I'll save that for last. So make sure you stick until the end. The third thing you can invest in to hedge against inflation is the stock market. And you can invest in individual stocks, but if you don't want to do so much research on specific companies, you can invest in index funds, or ETFs, which are great for beginners or non-sophisticated investors. So I think this is good, because when you put your money into the stock market and inflation rises, there are price increases that companies can take advantage of. And companies can also benefit from inflation because of these price increases. And usually, it's the companies that are less capital intensive that benefit most from inflation, or at least are more protected against inflation, because they have less costs to suffer from price increases due to inflation. However, a lot of less capital intensive companies also hire talented people, and they have to pay higher salaries. So you also have to be aware, because they might have to pay higher salaries because of inflation. But otherwise, in general, less capital intensive companies are more protected from inflation. However, I would say for the stock market, you should be careful, because these days a lot of stock prices are overvalued. So I don't think it's ideal for investing to hedge against inflation, because the stock market is already really beat up. And there might even be a correction where your stock investments will go down in value. So be careful about that. The fourth thing you can invest in to protect yourself from inflation are TIPS, which stands for Treasury Inflation Protected Securities. TIPS are a type of U.S. Treasury bond that are indexed to inflation, and their principal value changes with inflation. However, the drawback is that when the principal value adjusts with inflation, that adjustment is taxable. I think there are other investments that are better for hedging against inflation because they offer higher returns. The fifth thing you can invest in to hedge against inflation is cryptocurrency. So cryptocurrencies are an alternative currency. When your national currency, the fiat currency, is being devalued and depreciated and becoming less reliable, then people rely on alternative currencies like cryptocurrencies because they offer a way to bypass this unreliability of your national currency. With the mechanisms in place for a lot of cryptocurrencies like Bitcoin and other cryptocurrencies, they are more resistant to inflation because mining Bitcoin or mining other cryptocurrencies has been designed to be difficult and expensive. So that makes it more resistant to inflation, and when you have your national currencies becoming undermined, then people choose alternative currencies like crypto, and the value and the attractiveness of crypto rises. So now we're going to get into the last two hedges against inflation, and I believe these two are the best. First, we have gold. Gold is also an alternative currency, and actually historically it has been the currency for many civilizations throughout history. Governments still treat gold as currency, as evidenced by their large holdings of gold reserves. And even though national governments officially say that they have demonetized gold, they don't act like such. Because they hold so much gold in their reserves, they're still treating it as currency. And governments often even deal with each other in business terms with gold if they want to bypass using the US dollar. And with US sanctions on other countries and the threat of US sanctions, more and more countries are looking towards gold or other alternatives to trade with each other instead of using the US dollar, which has been the global reserve currency for the past half century. And there are reasons why gold has been the historical currency until World War I, when people dropped the gold standard. And that is because gold is indestructible, gold is rare, gold mining is difficult and expensive, which makes it resistant to inflation, and gold has inherent value. Whether or not you use gold as currency, gold is beautiful. Like platinum and diamonds, that beauty and that rarity makes it very expensive and valuable. And gold also has a lot of other commercial and industrial demand. So even though gold isn't used as a currency, like platinum and diamonds, it is valuable because of its beauty and rarity, which makes it a good investment and a good store of value. Also, if you look at statistics, the purchasing power of gold is stable and it even rises. And the dollar value of gold rises consistently. That is because gold has such a stable value, and because it's so indestructible and because it's hard to create or hard to mine more gold, the purchasing power of gold either is stable or it even rises. And if you look at the value of the dollar compared to the value of gold, you'll see that the dollar has to rise more and more to purchase the same amount of gold, which means that the purchasing power of the dollar decreases consistently and the purchasing power of gold is stable or increases. Finally, the best investment you can make to hedge against inflation is platinum. Platinum is 30 times rarer than gold. It is beautiful, but too rare to be used as a currency. So historically, gold was used as a currency because it was rare and beautiful, but it wasn't as rare as things like platinum or diamonds, which makes platinum even more valuable, especially in the world of jewelry. It's also very robust like gold, and platinum has inherent value. It is beautiful, it is very rare, and there is a lot of commercial and industrial demand. With the rise of clean energy, a lot of clean technologies rely on platinum. So I think that the demand and the price of platinum will increase because of that. Also, it is even more difficult and expensive to mine platinum than it is to mine gold. Mine production for platinum is 15 to 20 times scarcer than gold. Platinum also has higher densities and purities than gold, and platinum is usually more expensive than gold. And jewelers usually value platinum over gold because of how rare it is and how beautiful it is. However, the beauty of today's video and the beauty of the knowledge you'll learn today is that platinum right now is cheaper than gold. The price of platinum is lower than gold right now, so take advantage of that because it usually isn't the case. Platinum is usually more expensive than gold. Platinum tends to trade around 1.25 times the price of gold, but currently it's undervalued, so take advantage of this opportunity because usually platinum is not less expensive than gold, but now it is. You should take advantage of it. And with the rise of clean energy, like I said before, it'll get even more attractive and even more expensive because of higher demand and higher prices. To rank the best investments you can make to hedge against inflation, I would say first is platinum, second is gold, third is cryptocurrency, fourth is real estate, fifth is other commodities, sixth is tips, and seventh is the stock market, just because a lot of stock prices are overvalued right now. So thank you for watching, and I hope this video helped you in learning about how you can protect yourself from inflation and perhaps even benefit from inflation. Make sure to subscribe for more helpful content, and I'll see you guys in the next video.